We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button. And here we are with the SPY, the S&P 500 index, and we're going to break down what's going on in the overall picture here. Even though we've been going downwards, we are still above the recent lows of the year of the 360s. Will we retest it? Are we going towards it? And what has the bigger picture shown us on 42 vision and the inflow versus outflow indicator? We're going to break it all down in today's video. But before we do, I want to share with you guys the home run opportunity that was mentioned on Friday morning. And as you see here popping up on the screen, these are some of the home runs I managed to find last week alone. And while it's not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the stocks I mentioned this morning each gave 3 to 5%, 5 to 10% plus, but two of them turned out to be a home run, and that was BIAF and PXMD. We caught it in the pre-market here with BIAF sitting sideways towards the bell. The outflows were picking up, and all of a sudden, moments after, inflows picked up. They crossed the midpoint to the upside. It went ahead. It was under a bull indicator. No bear indicator popped up, and popped up with strength here on 42 vision for a highest point of 40% plus within minutes, guys. And then we caught PXMD. The inflows were picking up in the pre-market, and it went up nearly a highest point of 40% plus up towards the bell. Full strength on 42 vision. Pulled back down, found support. Inflows did not cross. They stayed above the midpoint and started to pick up. Got a bull indicator and went for another run of 40% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY after going up towards 430s, and we've been in a continuous downtrend after peaking at that area. And a lot of people are asking themselves, are we going to retest the lows back in June of the 360s, or are we going to find support above those levels? And this is all a fake out before the next breakout. And that's what we're going to talk about here on different time frames. But before we break it all down, I need to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to our SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility by bringing that clarity. And the slots are now open. You can gain access to it as well. The link is down below in the description. So here we are with the SPY under a bear indicator. Since 398 on Friday, things were going up higher, and it had hit an extreme strength area in a complete transition just based off 42 vision. So right now, wire with red borders on 42 vision is the dip area. It did a full transition to the rip area, which is bright green. It was under a bull indicator from Thursday to Friday. Inflows got crossed, and it was all sitting sideways. Instead of going straight up like in the previous times when things keep on going higher, it just keeps on going higher and higher. Instead of that, it sat sideways. The stock was going higher, but there was a hidden divergence with outflows picking up, but not enough to cross the midpoint. So that is something to watch there. Hidden divergence pulling down. The stock is going higher. It's hitting the rip area, and quickly after it shifted to dark green with red borders, crossed the outflows, and right after that, the next 30-minute bar was a bear indicator, and the stocks went down from 398 for the SPY all the way down to 391. And the outflows started to dominate, guys, coming right back down to where everything found support on Thursday at 390s, went all the way up towards 400, rejected that area of resistance, and fell right back down really fast in a matter of hours. That's what this is all about. having that clarity and edge with 42 vision to maximize within the moves. And as you see here popping up on the screen, our SPY bot even sent out a notification based off the 5-minute, and from that moment forward, put options probably went up anywhere from 200 to 300% within hours, guys. That's what it's all about. So here we are with the 30-minute on a downward trend and fighting this last week, kind of sitting sideways here. But when you zoom out at the bigger picture, this is where it gets more interesting, and it's super important to have clarity and an edge over the charts. This is not financial advice. This is my opinion alone, but I'm an advocate that investors should have clarity in their charts and have such edge. It doesn't have to be 42 vision, whatever it may be, but search for that edge and clarity. Every single investor deserves it, and it brings the edge that one deserves. That's my opinion. That's my perspective, to be able to maximize on opportunities. Again, it doesn't have to be 42 vision. Now, if you find value in what I share and you believe that this edge and clarity can enhance your charting experience, join us. Join the members using these resources to maximize within this volatility, because I believe volatility is here to stay. It's not going anywhere. So here we are with the 1 week chart, right? And there's something very interesting going on with the 1 week. The 1 week has been under a bear indicator since way back here on January 24th, right? And those connected to 42 vision knew for the first half of the year that outflows got crossed, the bear indicator popped up, and this right here was a fake out because no bull indicator had popped up, quickly shifted once it shifted from red with green borders to red bars, and the rejection here was below the inflows midpoint, and outflows were dominating, and it shifted from green to red, pulling further away from the midpoint to the downside. Super important there, and you could see the big pullback. Now we hit two dip areas based on 42 vision. It completed a full transition on the 1 week chart from bright green to white with red borders, right? The shifts are from bright green to white with red borders, and from white with red borders to bright green, going from rips to dips and from dips to rips. And in between, we get those bull and bear indicators as extra layers of confirmation, and our inflows getting crossed over when there's further strength, or when they get crossed down, meaning that there's further weakness to come. Now, there's a lot of volatility going on here, and we're in a very important and interesting level and area in this pullback such bear market that we're in. Or is it the end of the bear market and we're setting up for the bull market, right? Where are we? So we've actually went ahead and compared the 2020 crash at the beginning and also the 2018 crash corrections, but this is looking nothing like those, because they recovered like the V-shaped recoveries pretty quickly, and once those inflows got crossed, things continued to go higher. Now we're having a divergence here based off the 1 week, with the bull indicator popping up here from 411 up to 432, and then quickly going ahead and rejecting right back down. And it's going to be important to see if we get a bear indicator that cancels out this bull indicator, and we cross the inflows here and they're quickly slowing down, sitting sideways. And if they cross right back down and then a bear indicator, this is going to get canceled out, and this is looking nothing like 2018 or even 2020. I've actually zoomed out, and we've gone all the way back to 2000 and 07, 09 to compare some things that are looking similar, right? So in 07 or 09, things went straight down after that bear indicator popped up on November of 07, and it lasted all the way through March of 09, and a bull indicator did not pop up until May, right? And you could see how those outflows crossed, stayed below all that time, and it took all the way back up towards May of 09 to cross back above it and start pushing things back up after that bull indicator. Now things are looking a little bit more like, unlike 08, 07, 09, if not more like 0 to 02, right? I was about to say 00, but from 2000 to 2002, 2003, and that's right here, this point right here. It fell for almost a whole entire year, right? Several months to a year with a bear indicator, small jumps in between, and then a bull indicator popped up, and then things sat sideways and a bear indicator came back to cancel it, and then the inflows got crossed during that time, sat sideways, came back down, crossed the midpoint, and fell. and then it tried fighting there before the next big fall, and that's when things actually dipped and hit those triple bottoms here that we saw that lasted for almost a whole entire year again, until the inflows finally broke through and that bull indicator popped up in 03 of April and May. Now, I'm not stating it's guaranteed to move exactly the same as 2000 or 2003 or 08 or 2020 or 2018, but it's very interesting that we got a bull indicator in the middle of this pushing upwards, quickly rejecting here, and then these inflows are stagnating. They're kind of just sitting sideways. They need to continue upwards like it did here. Look at this from October 21st all the way to the peak here in December 21st of 2021, right? So super important. And right now, this is a very important area where there's a hidden divergence of either breaking back down towards it, cancel that bull indicator and get a bear indicator that we retest the lows down here of 360s and break below it, or there is some hidden strength here, and that's the key thing I'm watching. If this bull indicator holds true, well, it canceled that bear indicator. This pullback is the setup before the next bull run. We break finally above 430 in the future, and these inflows stayed above the midpoint. They didn't come back down. If not, they just kind of sat sideways before the next leg up to push up higher, further away from the midpoint with further strength. Now, that's the bullish case, right? If things hold up. But the bearish is this continues to pull down. This bull indicator gets canceled. We get a bear indicator. We cross back below it. And then things are starting to look a little bit more like the 2000 to 03. We'll need to see. And then comes the support down here of 360s. And then all the way down to 320s, right? But before the 360s, to kind of look at this in a tight range, the first support is 380. And then we're at triple bottom here. And we basically emphasized, right, in the 370s, 372 range, if it found support in triple bottom, it was going to take off. And it certainly did, right? Those inflows started to pick up. We were seeing that here on the 1 week. But when you go to the 1 day chart, we were watching that very, very carefully down here at this area. And you could see right there the triple bottom effect. That bull indicator popped up, strength, and then those inflows got crossed a few bars before that bull indicator, and then full strength to 430s, right? A lot of people did not see that coming, and our inflow versus outflow indicator showed us the strength. The bull indicator popped up, and if we broke above 393, we needed to see it hold support, and if it broke above that, it could go towards 410, 400, and then above that would be above 420, and it certainly reached it, and quickly things have changed already on the 1 day. But very interesting enough, it is at a key support level here at 390s, trying to hold itself up. Above that, it's at 392, but the outflows got crossed. It got that bear indicator, and this could be a point where if it starts a staircase effect, well, then that 1 week is picking up some specific levels that have been met, and if those inflows stay above, there could be some hidden strength here. So we have two ways to look at this, and it's super important to watch it from both sides. No one has the exact answer, but we do have cues and we do have technical levels in the charts to watch very, very carefully, because this pullback has happened so fast, but we still haven't reached the recent lows or even back towards it. Now, if we do reach those levels, we need to watch carefully how much this continues to pull down lower. How does the 1 week react? Does it hold itself up above it? Does it cross back down? Because that could signify further weakness. I mean, the last time it crossed was in January, and when it was pulling downwards, it went from 458 to 416. That's nearly a 40-point move, and 40 points from here, or even a little bit below that, once it crosses, if it was to do something similar, it would get us below the 360s and anywhere between 330s to 360 range, right? Where a lot of people are stating there could be some lows around that area, or we could test those areas. Now, the amazing part about the market is it moves in both directions, and one can maximize in either direction. And now, this is not financial advice. This is just my opinions alone. I could be completely wrong, but while stocks are falling, I always like to look for puts, and when stocks are going up, I look at calls. I know there's risk involved, but knowing why one is setting up for a specific position or opportunity to maximize on it, it comes down to clarity and an edge over the charts to make those decisions and go ahead and analyze the risk and take a rational approach based off what one sees, not just guessing my way through it, not just going off of emotions, if not what the charts are showing and where I can maximize within those moves. So very, very interesting stuff going on right now. And if this could start a staircase effect, as I stated earlier, it's going to be very interesting because the 1 week got that bull indicator. The inflows are above. If it doesn't and it starts retesting 370s, 380s, 360s, it's going to be important to watch the 1 week, how it's playing out, and if it tries to bring itself back down. If this bull indicator gets canceled out by a bear indicator in the process, and I'm going to go ahead and show you guys, if you made it this far into the video, what the 1 month is showing. But the 1 month is with the outflows crossed. It got a bear indicator here back in June, and it did try to bring itself back up from red to green, and it just shifted from green to red. If these red bars continue, we could retest the lows or even break through it, especially if the outflows continue as well, because just based off of the 08, 07 time from that bear indicator and also the 1 month on 2003, things continue to go down lower, and for as long as they stayed below the midpoint, things continue to pull back down. It's going to be very, very important to watch this if it continues to stay below it, because it could hold down the weight of pulling it downwards and gravitate things to newer lows. But back in 2020 and 18, things actually stagnated pretty quickly close to the midpoint and crossed back above just a few months after, right? So very important to see the differences here, that we are in a long-term bear market so far. And the bear market, some are stating it's over, others are stating it's just beginning. I look forward to seeing your thoughts down below, but I'm going to continue to watch the 1 month to see how it reacts. Is it going to break below the levels that the 2020 crash had? Back here it says negative 26, we're at negative 16.2. It's going to be important to watch that. And in 07 and 2003, we went to negative 53 and negative 70s, guys. So I'm not stating it's guaranteed to move exactly the same or it has to move the same, but it is important to see history, understand charts, have clarity, have an edge to maximize. No matter which opportunity you're looking for, whether it's a swing trade, long-term trade, short-term trade, but having clarity to also not time the bottom, but have an educative, not guess, but rationalization of what happened in the past and where we're at now, and manage risk plays a huge role in being able to maximize within a bear market, because once those bull indicators pop up on the 1 week, on the 1 month, they can last for several months to years, guys. And once they start picking up, it's sometimes some of the best opportunities to catch the dip with confidence. And one could say, man, I maximized within that bear market and found opportunities. Some people actually see this at the point to end the investing. This is where I believe investing begins. As always, thank you guys so much for watching, and let's make some money.